Happy Friday, everybody. This is Michael Lodge. I am the business advisor, and I'm glad that you've joined me one more time on my podcast. I tell you, sometimes I don't know if you guys are out there or not because no one sends me anything. Send me an email or something to tell me that you're listening to me. Send it to info@lodge-co.com. Listen, if you like my podcast, and if you like the subject matter, or if you want other subject matter that you want me to talk about or address, go to www.lodge-co.com and leave me a message. There's lots of places there that you can leave me a message. But let me know what you would like to hear about. And if you like my podcast, buy me a coffee there. You can buy me a coffee right there on my website if you go to the podcast. The link will be down below. Now, here's the biggest thing that we're all wondering about. Okay, Feds, they raise the interest rates. What does that do to homes? What does it do to real estate? Fed's Chairman Powell said, I don't know. He doesn't know. But their goal, he says, is that the Federal Reserve plans to reset the housing market. And so it's raising the likelihood of falling home prices. That's the hope, I think, everybody's giving. Forbes came out today with a article on this very subject. I'll give you the link below. And it was very interesting because as you read through it, Powell is talking about what he hopes will happen, but he says, I don't know. In fact, I'll read you just a little bit of a portion of the article. It says, it's not just about how expensive housing became, it's how fast it got there. It only took 24 months for U.S. home prices to soar a staggering 37%. For comparison, the biggest 2-year spike leading into the 2008 housing crash was 29%. Heading into this spring, the Federal Reserve decided it had seen enough. The central bank quickly raised interest rates, which saw the average 30-year fixed mortgage rate climb to 6%, which is what it's about right now, up from 3.2% at the start of the year. Those higher rates, which have priced out many homebuyers, ultimately ended the pandemic housing boom. Now we're in a sharp slowdown, with the Mortgage Bankers Association reporting on Wednesday that mortgage applications are down 16% over a year-over-year basis. After the shift occurred, we heard very little from the Fed. Well, until Chairman Powell came out and addressed some reporters' questions. So here's what he said. Here's what Powell had to say. He said, we saw home prices moving up very, very strongly for the last couple of years. So the changes now and rates have moved up. We are well aware that mortgage rates have moved up a lot, and you are seeing a changing housing market. We are watching it to see what will happen. How much will it really affect residential investment? Not really sure. How much will it affect housing prices? Not really sure. Obviously, we are watching watching it very carefully. It's a very tight market, he said. So prices might keep going up for a while, even in a world where rates are up. So it's a complicated situation, and we watch it very carefully. I'd say if you are a home buyer, somebody or a young person looking to buy a home, you need a bit of a reset. We need to get back to a place where the supply and demand are back together and where inflation is down low again and mortgage rates are low again. So what he's saying is that home buyers need a reset, and the prices are too high. The prices are over-exaggerated. I mean, if you look in California, and if you look at these little itty-bitty condos, that's not even 800, 900 square foot, going for over $1 million, that's overinflated. It's not worth that. If you were to replace it, would the cost to build that 900 foot for $1 million? Well, maybe in California it would, because of all of the restrictions and rules and regulations that they have there. But would it really cost $1 million or $2 million to buy that 900 square foot apartment or condo? It's overinflated. And around the United States, it's overinflated. Especially where individuals have moved from California and moved into Texas, prices went up. People who moved from New York down into Florida, the prices in Florida went up. Because they thought, moving to Florida, wow, these are low prices. I did the same thing. I moved from Los Angeles, where rents were $3,000, $4,000, and I was able to get the same thing in Florida for $1,850. The same thing a month. But then New Yorkers started moving down into Florida, and whammo, the prices went up. My rent went up to $3,400. That's a big increase. So you have all these people moving in thinking, God, these are low. Even still at $3,000 in California now, that's still cheap, because it's about $4,000 to rent anything. In fact, when I moved out of my place in Palm Beach, another Californian moved in. Now he's complaining and he's wanting to move out. So it's a cycle, isn't it? It's a messy cycle. So if you were to say, gosh, a few years ago, I owned a boutique real estate company in Los Angeles. And I would look at these trends every single day. And at that time, the market was really stable. It was, prices were going, sometimes they'd go up, sometimes they would go down. I know that in a house that we had in the Hollywood Hills, we bought it for $800. It went up to 1.2. And then it went up to 1.8, and then it dropped right back down to 1.2, and it was sold at 1.2. So we had all these markets. It was a normal style of market, and it was a good market. But now we're in a situation where the interest rates have gone up. That means it's less affordable to buy a home, because if you're paying 6% on $1 million property, you're paying a lot. You're paying a lot unless you put a whole bunch of money down. But that's a huge monthly payment. So what do? Well, gut feeling. I'm just going to go by my gut feeling, okay? If I was out looking at a house right now to buy, I probably would just look. I would just look, knowing that there could be a change in the next few months. Knowing that there could be a downward turn in home pricing. I think that as we look at this, we're going to see that prices will go down, but inventory will go up. Because at the moment, no one wants to sell everyone's wanting to sell the home, because the prices are so high, and so they're selling very quickly. But it's the wrong time to buy. If you're buying on the high side, you're a dingbat. I'm telling you, you do not buy at this time of a market where the prices are so high. Buy it when you know that there's an economical change and prices may drop. We have to watch that very, very carefully. In real estate, it's all about supply and demand. Right now, there isn't enough inventory on the market, but I have a gut feeling there will be. So what we're seeing is, it's clear that Powell hopes the housing cool down caused by rising mortgage rates will help to push inventory levels up. Powell suggests it'll help buyers, the thinking being when shoppers restart their house hunt, they'll be met with a friendlier market. Right now we don't have a friendly market. Higher inventory levels could give buyers more time to decide and reduce the chance they'll have to engage in a bidding war. I mean, I am seeing now where people are bidding $100,000 more than the asking price, and the seller's getting it. Now is not the time to be buying. If you want to buy a house, hold it off. Now is not the time to buy. You've got too many things happening in the economy. You have layoffs happening. You have people who have adjustable rate mortgages who are probably going to lose their home. So you're going to have houses out on the foreclosure market. You have a high interest rate now that the Federal Reserve is charging, which boosts up the interest rates. That 6% is probably going to go up. I remember the first home I bought was during one of the worst economic times. I was paying 14% in Phoenix, Arizona. I was at the highest ever. My mortgage rent at that, my mortgage at that time was well over $1,000, and I wasn't making that much. I was 21 years old. First house, bought a house with 3 bedrooms that I had to fix up with a pool. The real estate market in Arizona at that time in Phoenix was booming, but the interest rates were so high. It was one of those times that I can still remember, and I'm thinking 6%. That is really going to eat into people's cash flow. At 14%, it ate into my cash flow. It took almost everything I had. But then I sold it and I bought another home. Now, luckily at that time, interest rates had finally come down. I waited before I bought something else. And I think that's at the point that we're at now is that it's a waiting period. Waiting to see exactly what the markets are going to do. Now is not the time to buy. Forget about buying right now. Hold off. Build up your cash flow. If you have debt, pay down your debt. If you have credit card debt, pay it down. Start with the smallest and work your way up. But if you have credit card debt, get it paid down. If you have student loan debt, get it paid down. Get yourself to a debt-free type situation where you have greater cash flow coming in. If you need to get a second gig, get it. But now is not the time to be buying. You're stupid if you buy now. Because the economic situation is in mumbo jumbo. We don't know which way it's going to go. So be cautious, be conservative, and hold off. Well, that's it for today. That's my lecture for today. Now it's Friday. Now we can think about, okay, what are we going to do on Saturday and Sunday? I'd say rest and relax. Get your finances in order. Sit down and work on your budgets. Get ready for a long, long recession. Because that's where we are at the moment. We are in a recession at the moment. And at this moment is when we have to be very good stewards of our money. Listen, this is Mike Lodge, the business advisor. If you want to see all of my podcasts, go to www.lodge.co.com. You can also click there to go to all of my blogs that I have on business and taxes. Just click down at the bottom of the screen, and you will see where you can go to my blogs. Help me out, guys. Support me. I greatly appreciate it. Pass my podcast on to other people and say, come on, listen to Mike Lodge. He's saying something at least. Talk with you soon. God bless. Bye-bye.